President Trump's tariffs on Mexico, Canada, and China yesterday rocked the stock market, but it is rebounding a little bit this morning. Here's a live look at the numbers on Wall Street. The Dow is up 135 points, but of course, it has been down about 1,300 over the last couple of days, so this is just a small rebound. Joining us now is Kristin Myers, editor-in-chief of financial website ETF.com. Thank you so much for being with us this morning.
Of course.
Can we talk a little bit about some of the news breaking overnight that President Trump and the Canadian Prime Minister are going to meet today? It looks like there's talk of a potential deal or maybe meeting in the middle here. Can we talk about how this could potentially impact tariffs or what we might see?
Yeah, well, it really depends what kind of sort of compromise or sort of step back that we have from some of those tariffs. Just as a kind of reminder for everyone, essentially, the United States has levied tariffs of 25% on both Canada and Mexico, 20% on China, and the limitations, at least on the Canadian imports of oil or energy, I should really say, is capped at 10%. So we have to kind of see what kind of compromise is made. Now, of course, any sort of lowering of tariffs or even perhaps canceling the tariffs altogether and coming to some sort of compromise where no tariffs are levied is going to be a positive thing for not only the essentially U.S. economic growth, but also for consumers like you and I, who essentially are going to have to bear the cost of these tariffs.
Isn't there talk, though, that they could kind of piecemeal together certain industries and make that work?
Yeah. So obviously, Canada and Mexico, as you sort of mentioned, are our two biggest trading partners. And there's a lot of things that go over both our northern and southern borders that are going to be impacting U.S. consumers. So you can just think about things like steel and aluminum, auto manufacturing, medicine. All of these things are going to be impacted. And so there is definitely a possibility that what they're going to do, instead of saying, hey, you know what, we're going to make tariffs just 10% across the board, they're going to say, we are going to impact just those industries that really might hurt those U.S. consumers. So we're going to lower tariffs on things like autos or things like steel to make it a little bit less, I would say, painful to U.S. consumers.
Well, you were talking to, this isn't just Canada, it's also Mexico. The president there plans to announce retaliatory measures, it looks like this weekend. So can you talk about the consequences there?
Yeah, so really there we have a lot of agriculture that can be impacted, but regardless of whether it is Mexico, whether it is China, whether it is Canada, retaliatory tariffs are essentially that country's way of saying, you know what, the economic pain that you are making us suffer, we are going to make you guys suffer. Now, it's a little bit in reverse. Instead of us as the U.S. consumers having to pay the cost of those retaliatory tariffs, it is going to be the U.S. manufacturers of whatever goods are going to be impacted or flow across those borders that are going to be impacted. So the tariffs that we levy against other countries, U.S. consumers have to pay more money, and any sort of retaliatory tariffs on us, it's going to be the U.S. manufacturers that essentially suffer, typically because they see their exports decrease.
You know, I'm just curious because on Instagram last night, I'm scrolling through and I'm noticing some local businesses already talking about how they're going to increase prices just this week. Target came out last night saying that they're going to increase their prices. Is that a direct correlation to these tariffs, or is this kind of trying to put a buffer in before we start really feeling the effects?
Yeah, so I can't obviously say whether some of these businesses are sort of preempting the tariffs. We already have tariffs in place, although they were sort of paused, but we already have tariffs in place for China. So all of these businesses, especially ones that are actually trading or importing and exporting with a country like China, are already aware of exactly how these tariffs sort of impact them. And what we have found, because again, we don't have to really look too far in history, we had these tariffs and this trade war start during President Trump's first administration. And we did see two big things. One, U.S. consumers paid more money, and two, U.S. GDP and economic growth declined. It did have a constriction. And so if we do see all of these tariffs really go into effect, yes, it is going to be you and I that are really going to pay for it when we go to those stores. Because what happens is these companies say, hey, we're not going to pay the cost of these higher prices. We're going to just pass that right along to the consumer. And so you and I are definitely going to have to pay the cost for some of those taxes.
All right. Well, thank you so much for being with us this morning. Appreciate it.
Of course.